G'day guys, how's it going? So this is the follow-up video to my last risk management video. That was how to calculate your position size on spot leverage. This on spot trading. This one is going to be how to do it on leverage trading. So it's not much more complicated. You pretty much just throw in the leverage term and do the same maths. But I'll walk you through it. Hopefully it clears things up for a few of you guys. So we'll come and have a look at my trading view screen. Now I've picked the same stop loss percentage so that if you want, you can just compare the pair. You can just go back and look, and the only difference is going to be having leverage. So 5.36%, and we're just going to take a Bitcoin trade off this zone. So in the same way that leverage multiplies your gains, it multiplies your losses. So if you have a 5% stop loss and you take that trade on 10x, you're risking 50% of whatever capital you put on the trade. We're going to ignore liquidation for now. So what we want to do is we need the equation. So the equation is going to be our stop loss times our leverage, because like I just said, your leverage increases the amount you lose. So it effectively makes it, it's what I like to call an effective stop loss, is your leverage times your stop. That times our account size must equal 1% of our account. That times your position size. Position size must equal 1% times your account total, because that way you're only risking that 1%. That's crucial. That's exactly what risk management is all about. So we will call, in fact, I'll write this up properly so that you can just look at the terms. We'll call leverage L. We'll call our position size PS, and account total AT. All right, so in our example, you can see that we have a stop loss of 5.36%. 5.36% stop loss times. Now we can pick our leverage. So I like to always keep my effective stop. So my leverage times my stop loss, I like to always keep that below 40%, because it really reduces your risk of liquidation. I've been liquidated once when I forgot to set a stop. I've never been liquidated by keeping my effective stop loss less than that. So it works for me. So what we'll do is 5 times 7 is about 36. So that's probably ideal. We won't worry about the 0.36. We should still come in under. So times, yeah, we'll go 7x leverage. I won't put that L in there, that X in there, it's just going to get confusing. Times 7 leverage times our position size must equal 1% times AT. All right, so we can come to the calculator and go 5.36% times 7. So 5.36 is the same as 0.0536 times that by 7. And we get 0.3752. So 0.3752 times our position size must equal, we'll convert 1% to 0.01 AT times AT. And so then to get position size by itself, because that's the aim of this exercise, we want to calculate your position size. We divide both sides by 0.3752. So we get 0.01 times our account total divided by 0.3752. So now we can simplify this further, because we can divide the 0.01 by the 0.3752. So I've done that here, and we got 0.026652452. So we now know that our position size should equal the 0 times account total. So now what we'll do is we'll simplify, because we don't want to be carting around all these numbers. So we go 0.266, or we'll go 0.267 times the account total. Beautiful. So that's the equation that the calculator essentially uses, is you stick in your account total and it spits back your position size based on your stop loss and your leverage. So now we can come here and double check the maths. So what we want to do is, let's just say we have a $1,000 account total. Then we know we want 1% risk, so 1% times $1,000 is equal to $10, right? Now, if we use this equation that we came up with, we want our PS to equal 0.0267 times our account total, which means that our PS will be 0.0267 times $1,000. Well, I think I used the wrong O there. 0.0267. And so that gives us a position size of $26.7. All right. So now we know from our stop loss that we're willing to risk 5.36%. And because we're on 7x leverage, we're risking 5.36 times 7x. So to calculate what we're losing, we have a 5.36% stop loss times the 7x leverage times our position size of $26.7. No, that did work. Position size, which equals, so 5.36 is the same as 0.0536. In fact, we'll stick it all in the calculator. So times 7 times 26.7. So 0.0536, that is 5.36%, times the 7 for our leverage, times the 26.7 for our position size. This should spit back $10. Beautiful. So again, the same as the last video, it's out by a smidge because we did round off those numbers, but you can see that that's essentially given us our 1% risk back. So the fact that this 1% times our account size matches the equation we stick in our position size tells us that we're on the money. If our stock gets hit here, we're going to lose 1% of our account. So that's what's going on in the calculator when you stick your leverage in. I will do a video following up on this on my calculator, how to use it. But that's essentially the mechanics of the calculator. When you stick your numbers in, the calculator is just going through this equation and spitting back out a value of your position size. So there you go. Hope that cleared some things up for you guys. I hope it might even help some of you with the MBA assessments. I know some people struggle with the maths section towards the end of it. These sort of equations will go a long way to help you when you are doing those questions. So good luck. Hope you guys are having a fantastic time.